2780 level, something
Yeah.
like that. Do you know what is pressuring US dollar yen this morning?
Yep. That'll be Mr. Takata over at the Bank of Japan giving us some in-depth detail and pretty much saying that everything is looking like it's going to be okay for them to get into ending easing. He's unsure whether to call it for March or April, but which is that sown a bit of a seed that March might be a live meeting. So that gave yen pairs obviously a stamp on the head, but they're picking up again now. So let's see if it washes out like the last hawkish comments we got washed out, and indeed the dovish ones as well.
I would say, one of the questions I ask myself, and a lot of people don't. I know Blake's always thinking about how the other side feels. What you can add to that is where are the stops? And it's a lot of them are picked off, right? So
Yeah.
there you got to think, since we didn't make a new high here in yen, I don't believe we took out this high here. This high was what, 50.80,
Yeah, that's the number.
50.84. It actually did take out
Yeah,
the high.
80. There or
Okay, so
thereabouts.
all right, so there goes that theory. Oh no, this is 50.88. Okay,
Yeah.
so we didn't make a new high, and this was 50.84. So you know that everyone that's top picking this has their stops above that level.
Yep.
So, maybe what we need to do is take those highs out first, clean out the shorts, and then fail. That's just the way I think. Uh, you know, Guys, do that. When you look at a chart and before you're taking a position, ask yourself where the stops are. People say, well, Dale, how do you know where the stops are? Well, it's where everyone else has them. They're over swing highs, you get double tops or failing rally, and the stops will actually build. I have to believe that after going all the way back to that high was done mid-month and we're at end of month in 2 weeks, people that are top picking this, there's a ton of stops above there. And the algos, they want them. That's how they make their living. That's their liquidity for getting out of USD yen longs. So just a little
I'd like
tip.
to throw at you, Dale. You're saying about clearing out the stops before it then reverses. What about if it keeps going? That's the other side to
Okay,
break
well,
trading.
yeah, that's very possible. It could keep going. I'm just saying that when it gets up there, if it gets up there, okay,
Yeah,
so it's an if. If it gets up there, I'd be looking for a possible stop hunt. If
yeah,
it keeps going, if you want to join the party, sell it here, but don't put your stops a pip above 88. Give it some
exactly.
breathing room so that you're not a victim of a stop hunt. Say it takes out those highs by 10, 20 pips
Yeah,
and then reverses. They're going to get the stops a pip. Most people put them a pip or two above that swing high because they don't want to risk more than they have to. And what they're doing is they're setting themselves up to be right the market, wrong the trade.
we were saying exactly that on the flow show this morning. Trading is all
Yeah,
about patterns. Charts all about patterns.
yeah,
And here we have a pattern where you've got a solid top. So
yeah,
it's either going to break, trip the stops, and reverse, like you say, or it's going to break, trip the stops, and keep going. So you've only got two outcomes that
yeah,
you can trade there. You either sell into the stops, and
yeah,
or you buy the break and you have a tight stop back below the broken level. So
yeah,
there's something for everyone.
yeah. So just a little mentoring today. Aussie can't get out of its own way. Um, so gold, will gold finally do something? I mean, it's been a beach ball. Uh, Silver still looks vulnerable. And the yields, it's almost like the same, you know, right now, yields are stiff with yen lower. So we're up 4. So a hot number, or that we could make one more high up here and have a 1, 2, 3. So I might even attempt, uh, shorts in TLT. That happens. TLT does not look as good as yields. They still look pretty heavy. And risk, what do you do with that? I can't call it a flag anymore. Could call it consolidation, but that's the longest flag. I think if a
Yeah,
country had a
uh,
flag that long, go
I
ahead.
was going to say, Dale, when that flag extends more than 50% of the flagpole, it's not really a flag anymore. You're exactly right. It's a consolidation. So
Yeah, because
So we
if you had a flag like that, it probably wouldn't even be able to blow in the wind. It's so long, right?
you ever drive through like middle America sometimes, Dale, and you see these huge flags out in the middle of nowhere.
Yeah,
And yeah, it's kind of like one of those that might drag on the ground if the wind stops. So
yeah, and that's
hey,
a
I'm
sin.
sorry to hear that you're not feeling well. Are your migraines back?
They never left.
Oh, man, that's
I had
frustrating.
one day. Yeah, it's like 5 weeks straight.
Ooh, jeez.
Yeah,
Well, Dale, if you want, I know you have an interview today. I'll take over. I know K-Man's probably got some words, so I'll just take over from here, and then you
okay,
just kind of rest yourself, okay?
okay, bro.
All right. I'll like I said, I'm going to take over just because I think Dale needs a little bit of a rest before his interview comes up with Dr. John. I think
Dr.
that's
John and the Night Trippers. No, I'm kidding. That
okay.
was a band.
All right.
All right.
Trading with Dr. John. He'll
Yeah.
be up in a couple minutes. So Dale, take a rest a little bit.
Okay, buddy.
So guys, we've seen a lot of in my opinion, a lot of consolidation, but a lot of action in markets as the market has been consolidating. And Dale is exactly right as far as the S&P goes. And I'll just illustrate just so you guys can see what I'm talking about. We've been looking at it as a flag, but when the flag, this part right here, extends more than 50% of the distance of the pole, then it's not a flag anymore. It's a consolidation. We've
That's a
been
great rule. Like, sorry, I should
Yeah,
be
and it's
resting,
not
but
it's obviously not a hard well, it is well, it's supposed to be a hard
well,
fast
you use
rule.
it. You use
But
it, so it's good.
yeah, I mean everybody should use it. Like so when I see it, and it's not like if we break out, actually I should take this back. Let me remove this. It's not like if we move outside of this range, we can't get a break one direction or the other, and it could still be violent. So and this is a great time to teach this stuff anyway. I want to this I think is a good idea. So when you have a flag like this and then you have a flag pattern that looks like that, right? You can still get this extension equaling this move. That can still happen, but it's just not as the numbers kind of start to work against you at that point. And this is the same kind of analysis that I'm gonna give you on another piece of chart work that I've seen that drives me absolutely crazy. Do you want to know what my biggest pet peeve is in technical analysis? Is when Ryan does technical analysis on the VIX. That drives me absolutely crazy. I'm
no
joking.
chance. Never. Not in a million years
Totally,
will you ever see that.
totally joking. I'm just harassing you. I'm just seeing if you were listening to me or not. Um, Actually, it's this. When people look at, and this is a 100% product of 13, 15 years of melting up in stocks. Technical analysis has gotten very, very lazy. Okay. So a head and shoulder pattern is not a continuation pattern. A head and shoulder pattern, and this is a great example because I can actually illustrate it on two different occasions. You can see a head and shoulder pattern is actually a reversal pattern of a big move. A head and shoulder pattern, as you see here, is not a continuation higher. It's not. Go read, go back, pick up your 60-year-old technical analysis, Bible and go read it.
Edwards and
And
McGee.
yeah, Edwards and McGee. I got one sitting right over here. It's $70 well spent if you can get one used. I'm going to tell you that this pattern, like I said, it's very, very lazy, and you'll see a lot of newer technicians over the last, 15 years or so playing into it. The reason why is because they don't know any better. They don't know any better because stocks only go higher. And so when they go higher, everybody goes, "Oh, look, a head and shoulder pattern. We're going higher." And then and it'll complete just because we're in an uptrending market in the stock market. So you get everybody just saying, "Look, it works, it works, it works." That's because we're in a market that we've never seen. We haven't seen this ever. Think about 13 years of just providing liquidity nonstop, expanding balance sheets globally, every central bank. Then you throw COVID on top of it, which tripled everything. You're going to get markets that just grind higher no matter what. So it becomes very deceiving. So the reason why I say that is because I'm looking at this head and shoulder pattern, in this inverted head and shoulder pattern. The only reason I'm looking at it is because everybody else still is looking at it. For me, I won't measure it moving up to those to new all-time highs. That doesn't mean it won't. I'm just going to say that, if I'm going to trade this, I'm probably going to trade it. And by the way, I just got limited out of the pound New Zealand. I got long last Wednesday, got out yesterday at 208. I got out like 10 pips away from where we're at. And it was an accident. I didn't mean to get out. It was a limit order that had been outstanding all week. It was a huge gain for me. And I think a lot of you that were trading it on the long side last week from the trade-off show here on the F.A.C.E show from last week, I still think it breaks out. But a breakout, I won't be looking for that. I'll be looking for some stall, ahead of these new highs. But that doesn't mean it won't work. But that is one of my biggest technical analysis pet peeves is inverted head and shoulder patterns that people look as continuation patterns, and you'll see it consistently in the stock market because, like I said, people don't know any better. All they know, there's almost an entire generation of traders right now that know nothing but markets going up. I mean, you think about the last time that we had a real sell-off, and no, COVID didn't matter. COVID was I mean, it mattered, but it was a month and a half of a slingshot move. The last time we saw a real bear market was really the GFC, which is, 15 years ago, 16 years ago. So it's been a long time. Anyway, hey, I just wanted to fill up some time with that since Dale, is not feeling so well. I want to bring in K-Man really quick. And K-Man, What do you think about these comments? And I know Ryan already chimed in. What do you think about the comments from the BOJ overnight? Are you thinking that the BOJ might be ready to move?
Well, it does leave the door open for March, but as said on the Flow Show as well, I think it just increases the potential March from virtually zero to perhaps 20-25%. We still will have to wait for those wage negotiations. But the interesting thing is that we should hear from about them around the 13th. So that leaves them 5-6 days of thinking about that before making a decision for the next Bank of Japan meeting. I'm still in the base camp saying that they will wait for the new fiscal year, but he did scare the markets. But it did scare the FX markets more than it did the Nikkei or the Topics or even the Japanese yields. The JGB yields went up 4 BPs at one stage. Now they stabilized at 2 BPs, and same thing for the 2-year, which is some people like to look at them. They did exactly the same. So the FX market went beyond what the rest of the markets were doing, I think, for the simple fact that perhaps positioning, that people were a bit in complacent or short-term complacent, short yen positions, thinking on month end as well, and those got taken out. That is what I think about it. It's going to keep the market on its toes, and it's going to keep to make that 150.80 a pretty strong resistance right now, unless we get extremely high PCE numbers later on today. So, well,
Yeah.
in 15 minutes, yeah.
Yeah,
That
and
is
you
what I
know,
think.
I wanted to I mentioned this last night on the trade-off show with on the Pepperstone trade-off with Chris Weston. This 2-year yield, we're trading at levels we haven't seen since back here. You know, if you go all the way back, let's see where does it take us to? Right here, 2011.
Yeah,
You
that's
know, and this is the scare from October of last year. So you can see this is a weekly chart. You know, yields are moving higher, which is I think it's the market preparing for a potential BOJ move. So
yeah,
it's
very possible. But then
yeah. And that
it
doesn't mean we're going to get it, but you know,
mm,
the market, I guess this is probably a good function of the market because if the market is preparing for it, the it's going to lessen the blow should there be, I mean, you'd think, should there be some action from the BOJ. But that doesn't mean the FX market's prepared, and that doesn't mean that the Nikkei is prepared because obviously the Nikkei, as you pointed out, is still, you know, ripping and trading at all-time highs. Can you believe that we're finally at like new all-time highs? It still is crazy to me. I mean,
yeah, yeah,
Dale probably
we're
looks at his whole career and he goes,
yeah.
I can't believe we're up here, you know,
Mhm.
back to those levels. I mean, that's and you too, K-Man. I mean, for
Well,
that matter.
I've seen those levels 30 years ago, and now we're revisiting them.
Yeah, I mean, it was
Nothing
before
happened
my
over the past
time.
35 years.
Yeah, it was before my time, but I mean you know coming in to the markets in the late 90s, all I knew is Japan was just, you know, was going to hell in a handbasket. That's all
Hmm.
I've ever known, you know. Well, not all I've ever known, but that's what I knew when I first came in the business. But regardless, yeah, I mean, here we are, you know, years later. And I was pointing this chart out. I think if you don't really want to be short Nikkei here, but if that RSI breaks down, that's
No,
going to suggest that we're
because there are arguments if they go slowly, but the economy is holding up and people getting better wages, and there are arguments about amongst those investors who actually bought Nikkei that Bank of Japan getting out of negative interest rates is actually going to be pretty good for Japan. So paradoxically, of what we may think, Nikkei may actually, and the topics especially, may actually find support when once they get out of negative territory. But that because that will mean that they are confident. So there's something there's something, you know, for both sides. I think there will be, as I said, and that may especially happen on the FX side or the rebalancing between bonds between the JGBs and foreign bonds. But on the equity markets in Japan, I think we need to be a little careful to not, if you want to counter trade those highs, if you think the Bank of Japan is going to raise, keep it tight, keep it really tight, because and there's some good arguments in when the investors say that they still want to be and perhaps even go more into Japan once the BOJ gets on the move.
Oh, I agree. I think this is going to be the place to be over U.S. equities for the next couple of years. That would be my guess. All right, let's take a move over to FX, and I want to talk to Ryan really quick. So here we are. Before we get into like dollar pairs, I know you watched the Euro Sterling really quickly, and you want to talk about head and shoulder patterns. Here's a nice little setup for those of you that trade Euro Sterling. And here's a great example of a downtrend in the euro sterling, setting up maybe a double bottom, maybe an inverted head and shoulder pattern. If we break above, 85.80, this thing should get a nice reversal higher. And this is a great example of a downtrend reversal head and shoulder pattern. Would you really, I mean, do you feel that the euro should perform better than the sterling at this point, Ryan? I mean, am I crazy at this stage? What do you think?
Well, they're all sort of pulling in the same direction. If you look at growth, it's nothing to write home about anywhere, Europe, UK, whatever. So yeah, there's not much difference. The difference you'll get in this one is obviously the divergence trade between the BOE and the ECB. You know, one's at 4.5%, the other's at 5.5%. You know, so there's a whole percentage point difference to mess with if both are looking at cuts at some point. Still, the UK is likely to cut later than the BOE than the ECB. Sorry, the BOE is likely to cut later than the ECB, just because things, as I've talked about long enough, tend to be a bit more stickier there. But then the ECB have got a lower rate, so they don't have to be in such a rush unless the economy collapses. So, yeah, I think they're largely going to move probably round within the same time period, as I say. So,
so that's the thing, Brian. Like, I agree with you, and I agree with everything you're saying. But if I'm, just an outsider looking in, I look at the Eurozone, and then I look at the UK, and I'm like, well, of course the Eurozone is going to cut rates, quicker than the Bank of England, and Bank of England, of course, has stickier inflation. But that's how the market is obviously positioned. And so when you think about that, if something happens, which you just said, well, they're going to maybe, cut rates around the same time, maybe the market is just a little wrong-footed here, being too short euros and long sterling. So maybe you get a little position squeeze, and that's what causes this move higher. And it doesn't mean that we're going to get a euro sterling that trades back up towards 89 pence, but could we get, a 50, 80 pip move here?
Yeah, most definitely. We need to get above that 85, 70, 80 area. That's the line. You can't talk about anything until we're above there.
Right. It's just a setup it's just a setup until then.
Yeah, and while we're below there, it doesn't take the pressure off that 85 level. Because it keeps the downtrend in play this year and for longer. So it's a tightrope walk at the moment. You can only go one way or another. I'm getting a bit edgy now to think about maybe trying some little buy stops above that 85, 70, 80. But I can see it just running up to 86, 86.20 and slamming into another brick wall. So I'm not sure there's much margin in it. That's the problem with this one. You know what it's like. It takes forever to go anywhere.
Yeah, but when it trends, I like it. But anyway, all right. So I want to let's talk about like some of the best setups today, and I will talk a little bit about Bitcoin, because Ingmar says that we're about ready to have the highest monthly close in Bitcoin in history if we can hold on for the remainder of and happy leap year day today, by the way, guys. Look, K-Man, what are your best trade ideas right now for PCE? Strong PCE, weak PCE, what are you thinking?
Strong PCE, I think euro dollar takes a good stab at that 107.90, 108. Weak PCE, I think cable flies. Strong PCE, I think the commodity currencies like Aussie, Kiwi are probably going to get a hit again, and Canadian dollar flying through that 136, 620. But yeah, a weak one will probably also put a bit of pressure on the dollar yen. But then we still have to reckon with those end of month flows, right? But so far, the models are not getting it their way. And I just wanted to say that, because we saw a lot of those models trying to make calls and stuff, and they are not getting it their way. So I think that going forward for the next end of months, we are going to have to not completely discard them, but be careful if you want to trade them, because they are not really working too much anymore right now. So that's it really for me. I think weaker number, if it's a slightly weaker, should underpin the equity markets. If it's really strong, then yields should continue to fly and dollar do well, right?
Yeah, I like just I mean, K-Man's talking about end of month flows. Like I shorted the euro yesterday, right at these levels, and I closed it for a few pips just because I didn't want to be stuck in the crosswinds of end of month flows, PCE data, so I just took it off. But you're right. The end of month major dollar selling that we were supposed to get hasn't really transpired, at least not yet. We still have a couple hours before the London fix anyway. So Ryan, what are you thinking right now as far as PCE goes? What's your best opportunities right now?
I think this one you've got to be very careful. We had a story overnight from the BLS apparently sending out an email to super users questioning, why some of the data was so hot last month, and then they retracted it all and pulled it and everything. So they don't know what's going on in their data. So I think if PCE is lower than expected, that might erase what we saw over the CPI data. Then you've got to look at bonds, 2-year yields, 10-year yields, 10s down to 420. That'll be the big level down there.
Yeah, I mean, if we sell off in yields, I mean, based on what you're saying, I mean, that would be, a pretty negative event after not being able to fulfill a breakout. So,
and then you might finally get euro dollar looking at 109, that sort of thing. And stocks as well. We're playing ping pong in S&P 50/50 at break level and 50/80, and so watch for messing around over the data with that one. But if it breaks 50/50, 50/40, it's got to hold the break. If it doesn't, then it goes back in the box for a little bit.
Yeah, and that's I mean, these levels right here are going to be really, really key.
Yeah.
I do believe now. I didn't read anything about an email to super users at the BLS. I had no idea about that until just now, and that's one of the
You'll find it in the newsroom, mate.
What's that?
You'll find it in the newsroom.
Again, this is me waking up, just that's being North American and just getting up at a reasonable 4 o'clock in the morning time frame. But this is one of the things that if you guys don't listen to the flow show in European trade, you should. And this way you'll hear from Ryan and K-Man, and they'll talk about all these events and things that are happening. Obviously, I sleep during those hours, so I wasn't there. But the data flash, I'm going to pull that up and let's get ready for these charts. Me personally, I do think the data is, at risk of being a little hot. If it is, I think the S&P might be due for a little pullback towards 5010, which will be the 618 retracement. And then that 5,000 level is going to be more of the level to watch. As I mentioned in the trade-off show, I think the trade actually that's going to be most reactive is going to be gold. We're pivoting off of this 618. We're either going to, try to break out above some resistance here, or we're going to, push back towards 2000. I think one of these two things are going to happen today. So if you trade gold, you should get some follow through in either direction. If you are a gold trader, and yeah, any weak data, as K-Man said, I would agree there that the dollar yen would be in focus since it's already got some yen strength. Yep, we got. It's out. Shit! Here we go. All right.
It's out.
Data. Canadian GDP. You guys see the PCE data coming out?
Claims okay.
Yields are moving higher, but we haven't got
the
PCE.
On continued claims. 1.905 million. Here we go. It's coming. Income okay. As expected.
As expected.
2.8.
So the dollar's under a little bit of pressure as yields are too. You can see dollar S&P is kind of spiked back up. Yields are under a little bit of pressure. Inline data, but more of the jobs data came in a little weaker, and I think that's probably what's weighing on the market here.
I think it's probably the PCE that it hasn't gone up. So after the CPI, the market's a little bit tetchy. It hasn't confirmed that. It's come down as expected. So that's undoing a bit of the CPI bullishness or move we saw.
Yeah, here, and you can see it right here. And I'm gonna pull up the dollar index really quick. And I know, Dale, you have your interview coming up. There's the dollar index right there. And so,
well, it looks like we'll get that 103.80 close underneath it. So.
We are seeing a bit of the dollar pull back right now, and it's pretty decent. I'm going to, and now remember, one of the other things we have to contend with here, not only are we seeing the dollar weaken following the data, because as Ryan pointed out, maybe that PCE didn't tick up higher than people expected, but more importantly is we're going to have end of month So maybe this will feed into end of month dollar weakness. So I'm going to be watching that dollar yen as we approach the 149.50. I think that's going to be really, really key. And it should be an interesting day. Should be an interesting day in the markets. And I know there's a lot of people frustratingly shorting the S&P right now, but look, we just we're trying to take out these highs. So remember, we are in an uptrend in stocks. What's that?
Did gold break out?
Gold broke down. Should have broke out. Yeah,
but it's still trading 2030.
Yeah, we're trying. I mean, they're just God. Gold bulls have to be very frustrated right now. That's all I have to say. So, all right. Well, Ryan, K-Man, thank you guys for being here today. Thank you for all your thoughts and ideas. We're going to be back on the Morning Edge show, which starts in 45 minutes from right now. But first, Dale has an interview with Dr. John, so I'm going to pass it over to the man, the myth, the legend, Dale Pinkert.
Thank you, Blake, and K-Man, and Ryan.
Thank you, guys.
Good hunting today.
Cheers, mate.
Dr. John, welcome back to F.A.C.E.
Hey, good morning. I hope everybody's doing well.
Okay, that's
Share
a
a
good
chart
hope.
here.
Hope is good.
Yeah, happy leap year. We get an extra day.
Yeah, are you jumping up and down?
I am, yeah, extra day of trading this month. This is exciting.
Can you stuff a basketball?
Uh,
All right. Well, we are coming up to March Madness, so leap
there you
year.
go.
I don't know. Maybe you had a good vertical. So,
Right.
What's on the docket?
Hey, so yeah, so like I said, we got an extra trading day, so we'll see how this month ends up closing, right? I've got the 3-month chart pulled up here on the SPX. So again, last time we talked, Dale, we definitely had a theory of this going back to all-time highs, and we got there. I just do find it funny. It's like there's been no rate cut, right? There hasn't been, and you guys were talking this morning at some of the economic data, and it's like not much of a change. But yeah, all-time highs. There you go. So we made it. So all sorts of possibilities here. Again, there still is the chance that we have this running flat, which is basically the fake out move, where you have your A, B, right, which gives your fake out, and then you have the sharp pullback wave C. So that is a possibility. But as we go and we kind of just zoom in here on the daily
monthly
chart.
Oh yeah,
Yeah, that was
monthly.
a quarterly on that one.
Okay. Yeah.
And so the big thing we've really been tracking is this channel. I think we talked about this last time, and we just got nowhere close to breaking down on it, right? We just kind of set a fresh low, which basically tested the prior channel lows and then came right back through it, and now we're actually above it. So at this point, until that channel breaks down, it's hard to be really bearish on this market. Just you can have any argument that you want, but in the meantime, it is still working on its trend. Now, this recent move has been very interesting. I just want to just kind of illustrate that we've gone beyond. This might get messy here if I put a drawing up here, but we've gone beyond. I can't even get that now. There we go. We've gone beyond a symmetrical move up, right? So this market has just been pushing, and I guess what do you think, Dale, has been pushing on the AI hype? Is that been the whole thing here?
Yeah, I think NVIDIA, AI.
Yeah.
I think it's a big part of it. I mean, there are some I think they've changed the name of the Mag 7 to the Mag 4 now,
Mag 4.
where they've taken Apple out, Google, and Tesla.
Exactly. Isn't that interesting? So you've got NVIDIA, which was kind of a non-player for a while. I think we even talked about last time. It was forever an amazing strategy on earnings just to sell an iron condor because it never moved, and now it just moves like crazy,
Bitcoin.
Right? So yeah,
like
exactly. Like Bitcoin. And so so this thing's been wild. I mean, I've got I tried to construct a chart here to see if we can get to 1,000. Because we've already reached some sort of escape velocity. Even if you took like this, we're at like some huge like 17x extension on this thing. So anything is possible if it can do this, especially after the last stock split. We liked it at the beginning of 2023, and it definitely moved, but I never expected it to move like this, right? So that's been pretty wild. And then you've got names like AI. which I don't even really know what they do. And they I think they had earnings, right? And we're up a bit. I don't know if I got pre-market data on here, but I think we're up after earnings yesterday too. So that's kind of interesting. So it's that AI hype, and like you said, Tesla and Apple have not been playing really along in this rally very much, right? You've got Warren Buffett selling a bunch of it. I mean, not, a lot. What was it, like 10? I mean, for most people, it's a lot. But for him, not too much. I think it was like 10% or something like that.
Yeah. So you have like a 160 target on that one pattern?
Yeah,
Apple?
so it is possible here that, I mean, it's a bit of a contrarian view. In fact, I think the harmonic kind of invalidated itself. You've got a mini one here. Let me try to draw a fresh one here. Let's go here. So you kind of have this type feel to it. Let's see. A 1.618 takes us down to 170. A 2.618, yeah, that brings us below the 160 mark there. So that's interesting on Apple. And of course, we have the Tesla. I mean, you could say that it's playing along with the rally, but it's definitely, this is no Nvidia right now, right?
Yeah.
So I still have a bearish harmonic on this one. Taking it down maybe to a 2.618 extension, which would be down here. And I do have a wave count that kind of supports it as like a 1, 2, kind of looks like a 1, 2, 1, 2. So it is possible that that Tesla still continues this move, and that's been interesting, right? Because we usually don't see the Nasdaq pushing to fresh highs with Apple and Tesla not playing along. So it
How
just
about
shows how
Google?
strong.
Alphabet. Alphabet has
Mm.
also taken a few hits recently.
Few more hits, not as painful as those other charts. This has gone up to about the 3.618, so I'm not surprised to see a little bit of a pullback here. That ABC never really kind of worked its way out, so it might be working on some sort of consolidation phase, corrective phase, but it's hanging in there, So and again, if it does anything like Nvidia, it could go all the way
Oh, yeah.
up yonder.
How about so Apple's the second largest market cap. Microsoft did not make new highs with the recent parabolic move to the upside.
Right.
What do you see in there?
Yeah, I mean, Microsoft has kind of been in its own little world here too. Considering it along with Nvidia wasn't doing much for a very long time. It was just sort of like an IBM, Intel type company, and ever since they bought, what is it, the OpenAI, it's been hot. So again, I would keep an eye on all these big movers that have been happening recently. One of the things that we've been looking at is just the monthly chart. So one of the things, Dale, that we could do is we can look at all the recent kind of goofy booms that we've seen, right? So you've got your Beyond Meat. Remember that one? So,
Yeah.
we look at the monthly chart, it's like, okay, yeah, it goes crazy. And then once we get a little bit of red confirmation on it, they tend to pull back down. I'm not saying that Nvidia is going to do as much as some of these names, but it is possible, right? Here's your Piton, right? Kathy Woods, I know she's put over $100 million into Roku again, averaging down on this Roku trade. I just don't see it.
Still looks ugly.
Yeah, yeah. I mean, can we get? I mean, we did have a little bit of a
Why do
green month.
people follow her?
They do, yeah. And
Why?
I guess they're believers, So it just is what it is, right? A lot of
It's like a
people,
religion.
yeah, something like that, right? Exactly.
Okay. So, John,
So
we've talked about some of these mega caps and some vulnerability there. Lately, the biotechs have been really running hard. Where do you think the rotation will be if what led before isn't going to lead? Where are you seeing money flow?
well, that's a
That could
great.
be the new leaders.
Yeah, that's a great point too, because that was another big one, right? So it's like, where's the trends going, right? Remember NVAX? Remember the whole COVID thing? I mean, look at this. This thing went crazy. So is there potential for it again? Maybe. It does seem to like to spike. Um, we'll see where it goes. Again, we've been seeing that kind of across the board with a lot of these biotech names. There's Pfizer, right? Just red, lots of red right here at some interesting support levels. So who knows? Maybe there's a little bit of an oil trade out there, right? You've got your Oxy. We've been tracking this. I know Warren Buffett still likes this name. It's been holding this level really well recently.
Yeah,
where it is right now. So, and Warren hasn't been letting up on his position on this one. So that's an interesting one to keep an eye on. This whole sector that could get really interesting. Yeah, so those are a couple of things that we're looking at. Keep an eye on, and and I would still not, the KRE. I mean, this is not really a strong chart, right? So I mean,
It
these
is
regional
not.
banks a
Yeah.
little bit iffy. IWM hasn't really been playing along. It gave a pretty decent rally recently, and again, I still have the monthly chart up here, but it's just kind of in this like, who knows? I mean, let's go with this. Let's do an ABC on this one. So just like an A, B, C type thing. All right. So that's the small cap. So you're not really seeing it. It's mostly just this AI hype type thing that we're seeing out there. So the real question is, when's it gonna is it going to let up like all these other hype charts that we've seen in the past, and is it going to pull back as much as they have? So I think that's
what used to be a favorite of hard money people has been the miners, and
Yeah,
they are back to near 2020 lows, COVID lows. Do
right.
you see anything developing there that might be signaling a bottom?
I mean, there is I mean, you've got names like
Yeah.
CCJ, which
Oh
are kind
yeah,
of pushing
that
their way up, right?
uranium. Yeah,
So that's
uranium.
kind of interesting.
Yeah, that
Yeah.
was a nice run. But anything in the golds?
The golds. I mean,
Because
yeah, I know
gold's
you
been
guys.
stiff. Gold's
Whew,
been stiff, but look at the miners. Look at GDX.
yeah. Well, I mean, I don't know. I mean, this is to me. I mean, just looking at gold right here. This is a monthly chart again on gold.
Yeah, doesn't it look like it wants to break out?
Doesn't it look like a cup and handle pattern? I mean,
Yeah, it does.
where's my little drawings here? There we go. Let's do this. I think I can do this with the arcs here. So you got. Am I doing? Anyway, you get the idea. Cup,
Yeah, I do.
handle, breakout,
Yeah.
big resistance at this level. You guys were just talking about it. So gold is pretty interesting, and there's been obviously commentary on that. Oh no, I guess we got to pull up the Bitcoin chart, right? So BTC USD is that the big one here? There we go. Coinbase. Oh yeah, how about Coinbase? Did you guys see that Coinbase? If you have like Bitcoin, it's like they put an announcement out. Oh yeah, some of you might be showing $0 in your account. Don't worry about it. We're working on it.
Oh my God. Is there really a problem with custody? People, people's accounts there?
I don't know
When
what the
did that
results of.
news break?
Was this yesterday? I mean, there was folks that are that are in our little chat room that were like showing like the screenshots of their phone. They're like, yeah, I've got my $0 amount right now. So yeah, okay, cool. That's great on this rally. I feel really
Maybe
good
they
about
got
that.
caught short, another FTX. I hear they're going to
Yeah.
let them out of jail because no one really lost money because of this rally in
There
Bitcoin.
you go. Yeah, exactly. Got a slap on the wrist on that one and just kind of go from there.
There is a guy that I interviewed that really makes a major point out of self-custody of crypto, of specifically Bitcoin, and not to leave your Bitcoin at these exchanges,
That is
but to have
interesting.
them
Yeah.
in your hard, not leather wallet, but that hard wallet,
Right.
whatever
Right.
they're called. So it's kind of like, if you're stacking silver, um, you don't want it in someone else's hands.
Yeah.
You want the physical,
Right. And then it's like, then what
buried in the
happens when you try to
backyard.
settle? It's like, okay, I'd like delivery of my physical silver now, please. We're having some technical difficult phone breaking up
Okay.
here, breaking up here.
Esther is saying they fixed it at
Right.
Coinbase. So
Okay,
people
good,
shouldn't
good.
have zero balances anymore. Do you have an account there, Esther? Were you nervous? Just curious. All right, John. So energy, how about the bond market and yield? Do you have any kind of view on, we've had a correction,
Yeah,
yields have popped up?
I
Okay,
think we talked
there's
about this last time
TLT.
too.
Yeah.
We've got this. I've got the TLT pulled up right here. I mean, we've got this. We started to break out of this sort of bump and run type move. So
Yeah.
maybe we'll get. Well, I kind of started. This is a monthly chart, right? So I've got this possible 1, 2. Maybe we'll see a little wave 3 up here to test
Yeah,
that trend line.
120. Yeah.
Yeah, and then see where we go from there. But in the meantime, I mean, like we said earlier, I mean, the Fed has not lowered rates yet, right? So I mean, there's still money to be made there, right? Just in bills. I mean, like, so you know, until rates start going back down again, I mean, there is you know, there's I wouldn't say guaranteed money, but there's some pretty decent money to be made there too. So, and keep
Well,
in
I
mind,
think
you know,
that
yeah.
the argument for bonds is when they do start lowering rates, if you're just in bills, that goes away. You have no
Hmm.
potential for capital gains, and you have to buy longer term paper to lock in that rate.
To lock in the rate. Nice.
So, you know, that's a bullish argument in bonds.
Great. So yeah,
Doesn't
that's
mean
what
they
we're
can't.
seeing here,
Okay.
Dale. Again, we hit all-time highs. So I mean, what else do you want from us? You know what I mean? The real
Yeah.
question is, well, when are we going to pull back? It's like, well,
You know, in this business, you're only as good as your last call.
exactly. So, I like I said, I want to see.
What
I want
have
to
you
see if
done for me
can hit 1,000.
lately?
Right. So maybe
Okay.
slowly, just like kind of maybe just watch and see if we find some resistance levels on Bitcoin and see if Nvidia can hit 1,000 and where we go from there. But again, you really, like I said, you got to go about just pull up Nvidia here. You know, I mean, we need at least a red monthly candle, right, for us to get too worried,
Yeah.
right? Because already, like I said, the escape velocity is kind of hit. It's hard. You could put levels up the wazoo, and you know, just put any type of Fibonacci you want or whatever the case is, right? And blah. So we'll see.
Okay. Marty said he lost 700 transferring from Coinbase to his hard wallet, and they
Nice.
weren't interested. Nice. He lost 700 doing
Oh
it.
no. Trying to transfer. Oh, sorry, I thought
And
he
they
found
weren't
a new way to do
interested
it.
in helping him retrieve it. So
That's
you
fine.
also have to know how to do it, you know, how to transfer so you don't take those hits. Sorry about that, Marty. Yeah, I'm trying to think of the guy that I interviewed that's would help you. Neil, it's Neil somebody. Anyway, I'll look back at our past interviews. So, John, you want to tell our community
Yeah. What?
about what you do and you know how they could get involved with you?
Yeah. I mean, you guys, if you want to, you could follow me on Twitter. Trade with Dr. John. You know, the at symbol before that. So you can check it out there. I've got this book on Amazon that you guys can check out if you want. And so I stay relatively active on Twitter. So I, you know, I have some ideas that I use out there. And yeah, just you know, keep tuning in and watching Dale. And you know, every time we chat, you know, see if you can gain any new insights from our conversations for sure.
You have great energy. Any advice for how people could keep their energy level up like you?
Whew.
You work out a lot. Is it a diet? Every time you come on, you're effervescent. So
Oh,
I
but
was
well, thanks,
wondering.
Dale. It's just it's a zest and a passion for the markets, right, and
Okay.
life, and a really good cup of coffee.
All right, you're a piece of work, John. I really, I really appreciate you coming and sharing ideas with us. And people, at the minimum, follow Dr. John, trade with Dr. John. That's correct.
Yeah,
At trade with Dr. John. Correct.
beautiful. Yeah, perfect.
All right, and good hunting. I hope 2024 is a great year for you, John.
You too. Enjoy the extra day today.
Yeah.
Have fun with
Okay.
it, and uh, really appreciate it, Dale. Have a good one. You're our trading brother.
You're my trading warrior brother, and
I love it.
you have some great energy, and I remember what that used to feel like. So, thank you, John.
My pleasure. All
Appreciate.
right. Well, talk to you guys later.
All right, everyone, follow John at Trade with Dr. John, and you could join the team in 25 minutes on the Morning Edge. And I'll see you guys to wrap up the week tomorrow. Don't just count your charts, count your blessings, not just your head and shoulders. Adios. Thank you, Michael.